Was there a playbook to this? How did you get featured in Wall Street, Today Show, and other big media outlets?
Yeah, your audience is gonna hate me, man. I mean, I don't know how we got in Wall Street Journal. I don't know how we got in Today's Show. Actually, I do know how we got in Today's Show.
Hi there, I'm Vishesh, your host. I'm a 5-time founder, ex-CTO, and now building my 6th venture, 71. Our first product, Jerry, helps founders run an inbound-led outbound motion, helping them turn content into warm leads without being spammy or breaking LinkedIn terms of use. You can check out Jerry at tryjerry.com. Joining me today in this episode is Zach Shefska, co-founder and CEO of CarEdge. He pulls back the curtain on how he turned YouTube videos with his dad into a 10 million plus ARR company, transforming the way cars are bought and sold in the US. We dive deep into brand building, marketplace strategy, and practical GTM lessons for founders who want to build distribution-led businesses without blowing millions on ads. Hey, hi Zach. Thanks for joining me on the pod.
Thanks, Vishesh. Happy to be here.
Awesome. So, do you want to give a little bit of intro and talk about how you guys started on the journey and what does CarEdge do and why is now a good time?
Sure, Vishesh. Yeah, happy to be here. Thanks for finding me. So my name's Zach Shefska. I founded CarEdge 5.5 years ago. I'm currently our CEO, which is really fun. Forgive me, I'm a little sick coming into this recording, so hopefully my voice doesn't sound too raspy, but maybe some of your audience will appreciate that. Excuse me. Why is it a good time for CarEdge? Well, I'll first explain what CarEdge does. So I founded this company 5.5 years ago, like I said, and what we do at CarEdge is we help people buy cars. That's really the name of the game for us. So we operate here in the United States. It's really all about trying to make buying a car simpler, faster, more efficient, and more fair for everyone involved. And why is now a good time to be in this business? Because the car business is crazy. There's 25% import tariffs on cars. There's a parts tariff now impacting the auto industry. 5 years ago when I started this business, there was a chip shortage during the pandemic. Car prices skyrocketed, then they plummeted, then they skyrocketed again. It's a pretty crazy time to be in the auto industry, and buying a car even before all of this chaos was pretty challenging and difficult. And so definitely an opportunity for a company like ours to fill the void and just try and help people as best as possible.
Right. And so, how long have you guys been around?
5.5 years. 5.5 years, yeah. I founded the business with my dad literally 5.5 years ago.
I have seen co-founding units that are husband and wife. Friends, of course, is a very common path. But it's the first time, literally, in the 17 years I've been talking to founders that I've seen a father-son duo as a co-founder. How did you happen to choose your dad as a co-founder, and how is it working out so far?
So I have no experience in the auto industry aside from the past 5.5 years of building and leading CarEdge. My dad, however, Ray, he has 43 years of car sales experience. So I grew up in a household where my dad went to work every day at a car dealership and sold cars, managed dealerships, things like that. So when I had the idea for CarEdge, it made a ton of sense to bring my dad in. And quite frankly, I wouldn't have started CarEdge without my dad. So he's really, or at least initially, was the subject matter expert. I've learned a lot over the past few years. And what's it like working with my dad? It's incredible. Fortunately, we've built a successful company, successful in the sense that we get to, be on payroll nowadays. I wasn't for the first couple of years. We have an incredible team that gets to wake up every day and work on a worthy problem. We help tens of thousands of customers every single month. So success in those ways. And, it's also been successful in the sense that I get to wake up every day and work with my dad. So my relationship with him is very different than it was before I started the business. And I feel really, really, really excited, happy, content with everything that I've been able to do in my relationship with him. So it's been really, really positive, really beneficial.
Right. And so who calls the shot? You are the CEO.
Yeah, it's funny, man. My dad is my co-founder and he's very active on social media with me.
Right.
But he's not in the day-to-day of operating the business. That's me and the team, which I'm grateful for.
Right. And so you guys started as a YouTube channel. Did you always want to be a SaaS business when you started the YouTube channel, or it was a gradual change and you, during the journey, discovered this?
I had no clue what the business model was going to be. I knew I wanted to help people buy cars, And in my prior role, the company I had previously been at after I dropped out of college, I was in marketing and customer acquisition, demand generation, and I knew content marketing was something I was passionate about. So I had never made a YouTube video. I had never made a video, actually, which is kind of hilarious to think now because we have over 1,000 of them on our YouTube channel. So I didn't know business model, I did know content marketing, and I wanted to experiment with YouTube. And so what did we do? We built a YouTube channel. It is surreal to me today that 5 years later, across our various platforms like YouTube and TikTok and Instagram, we have over 1 million followers, which is ridiculous to me.
Yeah.
Like it's still hard for me to comprehend that we've built that. And as we built that, customers, or I guess our viewers, I should say, asked us for certain things and said, hey, we'd be willing to pay for certain things. And so really where the business has matured to today is it's a marketplace. We help consumers and we help dealers transact. That's why CarEdge exists, to make that more fair, transparent, efficient, and just a better experience for everyone involved. But Vishesh, a lot of that came out of building the audience, having a community, people saying, hey, it'd be really great if you could help with this or that. I didn't think we were going to be in the business of helping people ship cars across the country, but people kept asking for help there. So what did we do? Started to solve that problem. So YouTube and social media, I knew we wanted to do. I didn't realize quite how effective it could be. It's very effective. And then it helped us pull together, piece together what the business has become.
Right. And so how was the transition from YouTube to SaaS? Must be difficult moving people from one channel to another. What were the challenges moving from just being a channel to a SaaS product?
I would actually say that, there are challenges in any approach, but I would say building the community and doing the social media first and kind of, I hate to use this word, but like the influencer-led approach, I actually think has a lot of positives, a lot of tailwinds. So I think my dad and I have done a great job being trustworthy. We've been authentic. We've represented our brand values. And because we've been authentic, because we've been trustworthy, people then take an interest in the products that we've built, the platform that we've created. They inherently trust that. And then obviously it's our responsibility to continue to foster and cultivate that trust. So, there are challenges just like any marketing funnel or any type of customer acquisition funnel. You have to think through. There's going to be leakage at each stage of that funnel. But I would say there's tremendous advantage, especially when you're going direct to consumer, to building an influencer first brand. It helps. There's trust there. There's just inherent trust between the platform where someone found you and then the platform that you're trying to get them to ultimately create an account on or transact on. And especially in auto, where trust is one of the biggest pieces of currency that is missing in the ecosystem. People don't trust car dealers. People don't trust the automakers. People don't even trust the existing marketplaces like cars.com or Car Gurus or Auto Trader. And so for CarEdge, it was really important that we led with trust, and social media helped enable that. And then I think, quite frankly, Vishesh made it easier to bring people over into our platform.
Right. And so why did you choose YouTube? Was there a specific reason to choose YouTube?
Apologies for needing a swig of water here. This illness I got, it's not fun. But why did I choose YouTube? I think because I consumed YouTube videos. This was really like maybe at the beginnings of TikTok taking off. Instagram was super mature. Facebook, obviously, incredibly mature. YouTube is just where I spent most of my time watching videos. And so I thought, okay, maybe there's an opportunity here. And I remember when I did the competitive analysis and research, there were a few people making like car buying videos, but no one that really made it fun. And I knew my dad was fun. I thought my dad was fun. So I thought there was an opportunity for us to kind of, squeeze in there. And then obviously we've grown to the largest educational car channel on YouTube. So we've done something right.
Yeah, one thing I like about YouTube, unlike other media distribution where video is involved, is they actually after a certain point start paying you for creating the content. Have you started generating revenue just from the content itself?
Yeah, I actually have a YouTube video on my personal Zach Shefska YouTube channel where I shared how we've made millions of dollars from YouTube.
Wow.
So yeah, no, we've generated millions of dollars in revenue from YouTube, which is crazy. And we've used that to fund the business. And I've been very open about that. That's the trust and transparency is like, if we're going to do this and we're going to build a brand that's rooted in being authentic and being transparent and being trustworthy. So yeah, short answer is yes. We've made a lot of money there, and I've been very open about that process.
And so how does this de-risk some of the, building a marketplace is obviously hard. You have to have both supply and demand. How did the YouTube journey de-risk that?
It de-risks the demand side. So if you think about our business as people who want to buy cars, demand, and dealers who want to sell cars, supply, you could start on the dealer side, but then you're going to have a bunch of dealers who say, hey, we want more customers, we need more people. And that's a tricky situation to be in. Or you could start on the consumer side and you could say, hey, we want to buy cars, but we don't know how to do it. And we've focused for the past 5.5 years educating those people on how to do it, how to get a good deal. And you can build a business without even having a supply side. You can just build a consumer business teaching people how to buy cars. We could have just been a media business, for example, made a few $1 million every year, gone our merry way, been happy. However, I see a bigger opportunity to innovate on the actual car buying process and actually bring in the supply side and say, hey, here are these super educated consumers. Here are these people that want to not get taken advantage of. They just want a fair deal. They want to be informed. Do you want to join our network so that you can transact with them? And these dealers, they say, okay, well, do they actually buy cars? Do they convert? And the answer is yes, unequivocally. The conversion rates of educated consumers are significantly higher, and the satisfaction of educated consumers is significantly higher than the satisfaction and conversion rate of uneducated shoppers. And so that was really the theory and the thesis. And so leaning into YouTube and leaning into social media helped de-risk the demand side, because it enabled us to get millions of views on our content, which also engendered and brought in trust. And so like you can see a little bit of a snowball effect there that ultimately led to going to the supply side and saying, do you want to, engage with these really educated people who want to transact quickly? And the supply side said yes.
Given that there are already existing marketplaces that are online, that are built on the idea of removing opaqueness from a deal, why was there so much hate, and how did you capture that feedback? How did that surface to you as a business?
I mean, remember, my dad lived it for 43 years on the supply side, on the dealer side. So I heard from my dad all the time, man, it's such a pain in the butt working with Name, the online car marketplace that sells leads to dealers.
Right.
These leads never close. They never actually want to buy the car. It takes forever. We have to hassle and haggle, negotiate, all that. So I heard it from my dad growing up. And then obviously as we built out our marketplace, I used a lot of the information he shared with me. And then on the consumer side, you don't have to look that far. I mean, Gallup here in the United States does an annual trustworthiness of profession poll. And number 2 at the bottom, so furthest down on the list, right before congressperson for least trusted profession in the United States is car salesperson. So there's a huge consumer perception that the salesperson at the car dealership is trying to take advantage of you. And that perception is reality in a lot of cases. There are great dealers out there. I want to be very, very, very clear. And we work with a lot of them. But there's a lot of instances where you go through a traditional marketplace, you submit your information, you become a lead, you get a bunch of spam phone calls, and then the dealer's trying to rip you off. So the opaqueness that has been brought to the market through these online platforms, a little bit, but there's tremendous opportunity to continue to iterate and improve upon that. And again, it's on both sides of the marketplace. I heard it firsthand from my 20 plus years growing up in my dad's household. And then obviously on the consumer side, the trustworthiness is a leading indicator for the opportunity there to do better.
So what you're saying is, even though there are online marketplaces that existed, they would push the deals back to these traditional dealerships and the opaqueness would still be there, more or less.
Well, you got to understand, buying a car from a dealership, even if you go through a third-party lead generating website, at the end of the day, you're buying the car from Jane Doe Honda, not from Car Gurus. Guru's purpose is to merchandise and really bring awareness to that inventory and then generate activity against it. And that's not dissimilar from CarEdge. We bring awareness to particular dealers' inventory. We then educate consumers on what they should pay and give them the tools they need to have that conversation with a dealer partner. That's where the disconnect happens, Vishesh, is you go to a traditional automotive marketplace, they hand you off to a dealer, and then you're on your own. You're now in battle with someone who does this every single day of the week versus you do it once every 5 years, maybe. And so now you're going in there and the dealership's playing all sorts of games with the numbers. Here's what you need to buy. This add-on's not removable, things like that. Yeah. And so that's where the experience really takes a turn and becomes more of a headache and a hassle for the consumer versus what they want it to be, which is buying a $1,000 thing. I want it to be kind of luxurious, kind of nice, maybe not so stressful. And that's where we've really taken strides at CarEdge. This is partly why we also offer a concierge service, a service where we do it all for you. So instead of you having to actually lift a finger, you can just have someone who does do this professionally every single day, really almost be like your administrative assistant and have them handle it all on your behalf. So that's where the existing incumbents have really dropped the ball, is in that handoff. The experience goes pretty far south pretty quickly. And it's really not a lot of incentive for car dealers to change their behavior because they make more money. I don't think I've ever met a car dealer who's not wealthy. Like, they do really, really, really well, even though the customer experience is quite poor.
And so, where are you at in terms of scale? How many geographies are you servicing
We're
in the
only in
US?
the United States. We get a lot of people asking us to operate in Canada, but only in the United States at this time.
All over.
Yeah, all 50 states. Yep.
And so, you've pretty much nailed YouTube when others probably missed it, especially in the auto industry. Do you have any recommendations for people to spot channels?
I mean, I would say we were not particularly strategic. I just leaned into what felt right at the time. I would
Right.
say if you're listening to this in 2025, the opportunity is 100% in AI as a new distribution channel. So generative AI, the large language models, things like that. That is undoubtedly the opportunity moving forward. I would say we actually caught the YouTube and the social media trend a little bit late. Like if I could do it all over again, I would have started on YouTube maybe 5 years earlier. And I think we would have caught even more of the wave. I think that wave is slowing down for the most part. And the wave before that was SEO. And I don't know. I mean, I think you can see these big transitions happening in distribution channels. And again, the one that I'm most fixated on at this time, and I would imagine will be the one for the foreseeable future, is how do you get generative AI to think of your brand as being authoritative and showing content at the right time. And my hunch is that these LLMs that, especially the chat interfaces for the LLMs, will ultimately just become like Google search. Like there will be ad networks against them. You'll be able to bid for keywords and placements, but obviously figuring out how to do that organically should be more creative and valuable for whoever's operating in that space. So I wouldn't necessarily take my advice. I just went into what I was using at the time, and I think I was
Yeah.
5 years late.
Yeah.
Still, we built a hell of a lot over the past 5 years, but the next big wave very clearly feels like to me this generative AI opportunity.
What are like the top 5 do's and don'ts on YouTube itself? Like somebody who's starting out, what would you recommend them versus?
Top 5 do's and don'ts on YouTube. Let me think. First and foremost, make quality content, like help people. It doesn't necessarily mean the production quality. That's a do. The production quality doesn't have to be high. Our first video that ever went kind of viral, like a couple 100,000 views, was a 360p Zoom phone call recording between me and my dad. But the quality of
Zoom.
the actual, yeah, Zoom, but the quality of the actual content, what we discussed, was high. It was valuable, it was useful, it was informative, and it was kind of funny. So I would say do on the, actually have quality content. Don't worry so much about production quality. Don't worry about every edit being perfect, things like that. I would also say on YouTube, another do would be just ship it. I've been shocked at the number of things we've put out into the world that I was like, this one's not going to do so good, and it does great. And others where we've spent so much time, so much resources, so much money on, and they perform poorly. So I would say, do just ship it. Don't into the nitty gritty of every single component. I hate this one. Do lean into clickbait. It's so annoying. This is one of my least favorite things about being on social media is flames and alarm bells and anything in media, unfortunately, that is more skewing negative gets picked up more, which is really, it's like more of a like an anthropological assessment of psychology. Like people click on things that are negative versus things that are happy, which is a bummer. So that's kind of a do. I'm trying to think what else. I don't know. There's a few in there that hopefully should be helpful for your audience.
Right. And what about the don'ts?
Like I said, don't like micromanage every single aspect of a video. Don't worry so much about production quality. Oh, another do would be actually collaborate with other YouTubers. So as soon as you can start to get yourself picked up by other channels, like we did some reaction videos early on that built us relationships. I'm trying to think don'ts. I don't know. Don't start like internet beefs with people. I don't know. Like focus on the do's.
Yeah, focus on the do's. Yeah. And so once you prove the early traction, how has your GTM evolved over time, and how do you acquire both supply and demand now?
Yeah, go-to-market continues to evolve at our business. Still early stage, still small, very small company. Excuse me. But obviously the focus was on leveraging social media to gain the demand from consumers. We've executed on that. We continue to scale demand through SEO, which is again kind of a more mature and slowing down growth area for us, social media, which we've talked about. And then obviously the area that I'm most passionate about now is this generative AI space and how do we win there. So that's how we continue to do go-to-market. on the consumer side. On the supply side, it's really interesting. Auto is highly fragmented. There are a handful of publicly traded dealer groups in the United States, and if you were to take all of the market share of those publicly traded dealer groups and add them all up, it would represent less than 10% of all market share in the auto industry. So that is how fragmented auto is. The largest player is either Carvana or CarMax, and both have about 2% market share. So it's really tiny players, but to be clear, like worth tens of billions of dollars, but tiny players relative to how big this multi-trillion-dollar asset class is. And so on the supply side, we do target those big opportunities. We target, dealer groups that represent a percentage point or half a percentage point or a quarter of a percentage point of market share to join our network, as well as the OEMs. So that's what's interesting, the original equipment manufacturers. That's what's interesting about auto is it's a multi-tiered system. And at tier 1 is Ford, General Motors, Hyundai, Kia, Mazda, Nissan, etc. And so we've developed relationships at the OEM level, which then if you have an OEM program, it gets rolled out either sometimes optionally, sometimes not optionally at the dealer level. So those are some of the things that we've done from a go-to-market perspective on the supply side. But as you can imagine, you're working with much larger corporate entities. They move a heck of a lot slower. So it's like on the consumer side, we can make a YouTube video and get 1 million views all in an afternoon. And on the supply side, I mean, it's months of just trying to figure out who the right person is to talk to, getting that meeting, and then waiting another few months to get the second meeting. So it's very different operating playbooks on either side of the marketplace.
I was talking to, it's funny, in the last 2 weeks, 3 weeks, I've spoken to you and Will from Fair Warranty. He's actually also an Antler founder and your customer. And both of you mentioned, especially on the supply side, how important it is to have conversations. And so how do you go about getting those meetings and conversations to begin with? And how many events are you attending, if events is the route?
I've never attended an event.
Right.
And I have no interest. Sorry, auto industry. Yeah, no interest. No, I don't go to any of the trade shows. I don't go to any of the events. Nothing like that. We get a lot, actually, it's interesting, through the media. So I'm thinking about our relationship with Ford. The way we got our foot in the door with Ford is we had a video go viral talking about Ford, got over 1 million views. And next thing you know, the team at Ford was reaching out to us. So it's really a little bit of being creative on that front. So getting some opportunities there. Right. Which again comes back to social media, comes back to what we've done on YouTube. And then the other side would be relationship building. So, all these people that I've met over the past 5.5 years, staying consistent, following up with them, realizing that, hey, maybe today I don't have an ask or something I need help with, but maybe I can help this person. And then in a year, maybe I'll need, some reciprocity from them. So it's a lot of being really resilient and trying to maintain those relationships. And then, like I said earlier, creating the content on social media has also given us some opportunities, some yield. It's really interesting. I mean, I go into these meetings with larger corporations and the executives that work there, and they've seen our content. They know who we are. And so I think there's a halo effect that we get from everything that we've done on social media.
And so these meetings, because you're not going to events, you're probably booking it through outbound.
No, I mean, a decent amount come inbound. I mean, we get people who watch that content. I also have brought on one person onto our team who lives in Detroit, really, really well connected in the auto industry. But the only reason he came on is because he saw how we were doing things differently. So no, it's not like we've ever employed business development reps or anything like that to do outbound sales or outbound lead generation. I think our story might be a little bit unique because of the social media asset that we built and how we can leverage that. And then, like I said, one person on our team who kind of has roots in Detroit, who knows a lot of those people, who's credible and can help open some doors.
Interesting. And so how ops heavy is this in terms of SaaS versus people? How much effort it is offline to get a deal across?
At the end of the day, we help car dealers operate in a way that we think is more fair and transparent and efficient, right. And we help consumers get more educated and informed to go into that engagement. And then we do offer a fairly intensive service called a concierge service, where a consumer comes to us and they say, "Hey, I want a 3-row SUV." That has 4-wheel drive, and I want to spend under $75,000. Can you help me? And then we will enable, facilitate, find vehicles, things like that. That's pretty labor intensive. We've got a team of about 10, 12 people that just do that business every single day, every single month, and we help hundreds of customers actually transact in that way, which is great. But then the more scalable product line is the one where we're handing off our educated and informed and empowered CarEdge community members to our dealer partners. And that, Vishesh, that's got really no cost infrastructure against it because we build the software, we build the tooling, we build the networks and the relationships, and then we're really just enabling commerce. And about a third of the time when we make that introduction and that relationship, that person's buying a car. And so it's a really effective and productive product line for us, and people are happy. And obviously with the concierge, it's more than a third of the people that pay for that service buy a car. It's more like 90%. About 10% of the time people realize, hey, you know what? I don't actually want to buy this vehicle, or I can't get approved for my financing, things like that. So that's a little bit more labor intensive. And then on the other side is obviously, like I said, just handing people off to our preferred partners and making sure they have a good experience.
Apart from your channel, you've also got decent media mentions. Was there a playbook to this? How did you get featured in Wall Street, Today Show, and other big media outlets?
Yeah, your audience is going to hate me, man. I don't know how we got in Wall Street Journal. I don't know how we got in Today's Show. Actually, I do know how we got in Today's Show. The journalist, Vicky Nguyen, said on the Today's Show, one of her community members told her about CarEdge.
Right.
How? I don't know. I'm assuming social media. Like, I'm assuming what we've built on social media over time is kind of what gave the awareness. When we got the Wall Street Journal mention, I was over the moon because I grew up reading the Wall Street Journal. So I was like, holy cow, we're in the Wall Street Journal. And we were associated with Edmunds in that article, which Edmunds is a brand that CarMax bought for $500 million 5 years ago. So like to be associated with them was a really big deal. But I think at the end of the day, it goes back to some of the do's and don'ts we were talking about on YouTube. Like, we make quality content. The Wall Street Journal reference that we got was with regards to a study we did on negative equity in the auto industry. And Edmunds also produces a negative equity study. We took a slightly different approach, got some complementary data. Next thing you know, Wall Street Journal's writing an article with their data and our data. We produced quality content. We had some initial distribution, right, through our social media channels, and then it got picked up. Today's Show was just a brand mention, which was awesome and humbling and incredible in so many ways. But I have no clue how Vicky Nguyen, which thank you, Vicky, for having done that. That was an incredible moment in my career and an incredible moment for our team and a great moment for the business. But I don't know how that happened. We do have someone on staff now that does PR and does communications. And we do get hits from that, every single week, which is incredible. That feels more like brick by brick by brick. And we have had some experiences from that where other journalists have reached out to us because they've seen us referenced in other pieces of media. So there's definitely a foundation that's being laid there. But some of the earliest wins, it goes back to resiliency, producing quality content, and a lot of getting lucky.
And so the thread really is, in your case, the quality of the content. You said you do have one person who's producing some of the content. Is that right?
Yeah, I mean, my dad and I still do all of the video content. We've tried bringing other people into the fold over the years, but really it's just us that's felt good and stuck. But then on written content, surveys, studies, guides, blog posts, things like that, yeah, Justin on our team does an incredible job and produces, especially now that he gets some help from those LLMs, we're producing a lot of content. He does an incredible job with that.
And so typically what kind of research has resonated? Like what format?
You mean like what research have we produced that's resonated with the market? Yeah. We do a lot of surveys. So since we have such a large consumer reach, we're able to do surveys to our audience and get hundreds or thousands of responses very quickly and kind of get a temperature check on what's going on. So a good example of that would be we did a survey based on consumer sentiment, or asking questions about consumer sentiment tied to tariffs. And so we asked our community, hey, if car prices go up by 25%, would you still be in the market to buy a car? And we found that, shockingly, not a lot of people would still be in the market to buy a car if prices went up by 25%. So that's the type of research that we do that is both A, simple for us, B, efficient, and then C, resonates with the market.
And so you've scaled now to 10, can we mention revenues?
Yeah. From a run rate perspective, around $10 million a year in revenue, which is awesome. Really, really, really an incredible milestone.
So what's the biggest mistake you would want to avoid during the scaling phases between, the YouTube and now 10 million ARR?
So biggest mistake that I did make or wish I had avoided from scaling the business
You
thus
wish
far?
you had avoided and which you did make. Yeah, I guess.
Biggest mistake I made building the business thus far. Probably the biggest one was, maybe not the biggest, but the one that comes to mind first for me was trying to understand raising venture capital and kind of what that entailed for the business.
Right.
And I think I would put that in kind of, if I bucketed like, small, medium, large, like that was a large, I wouldn't necessarily even say mistake, but just like consideration that I didn't necessarily fully understand because, and it goes in that large bucket because at such a structural level, the moment you take on venture capital, you're committing to a path of, trying to return a fund and trying to have a really, you know, I'm going to say multi-billion dollar outcome, which is hard to do. I mean, it's like statistically incredibly
Yeah.
low likelihood that that happens. So you asked me what was my biggest mistake from trying to scale the business from YouTube to today, and I would say, bringing on millions of dollars in venture capital and spending years trying to think about not building a good business, but building a great business. I mean, that was a mistake because there were many times where I wasn't listening to customers and instead I was listening to, well, if we do that, we'll only be worth $100 million, not $1 billion. And if
Right.
I could go back in time, I would just be worth $100 million to even have the opportunity to think about being worth the $1 billion. So I think I feel a little uncomfortable calling it a mistake, but I think it's a crux. I think it's a problem that founders, who contemplate going that path will face, and I think
Yeah.
it's one to be really honest with yourself about and what your intentions are for why you're starting and doing what you're doing. And we bootstrapped for a year and a half before we raised money, so we kind of got to feel both sides of it. And I don't want to sound jaded because the privilege of raising venture capital is incredible as well. The opportunity to hire incredible talent and try and move quickly and to be able to fund that is so privileged and so beyond words to say. So double-edged sword there.
Yeah, indeed, indeed. And so, how easy or hard was it to raise money with your father being a co-founder?
So my dad actually wasn't particularly involved in the fundraising process. I mean, sometimes I'd put the phone on speakerphone or he would sit out of camera view and listen in on what was happening. I really took the lead on the operating side and he was there as that subject matter expert in social media. But how hard was it? It was really challenging. I mean, I knew no one in venture. I knew no one in investing. I was a college dropout who started a YouTube channel and wanted to build some products around it. So yeah, I mean, it was really challenging. I did a bunch of cold outreach to hundreds of venture capitalists, and one of them got back to me, and that one ended up being the person who wrote a check into our pre-seed and then into our seed round. And so, yeah, I mean, I don't want to trivialize it. I mean, it was a lot of work and a lot of tenacity and resiliency to be able to actually,
What I meant also was, given that your co-founder is your father, was there resistance because of that, or that was offsetted by the fact that he comes with such a rich industry
I don't
background?
think there was any negative perception of going into business with family. Never recall or no, I mean, I don't think there was a single negative perception about
Right,
father-son
because one
feeling.
of the things that VCs hate about at least couples is you might break up, but with a father son maybe that's not not in the picture.
One of the funds that invested in us had another father-son business. The
Wow,
father was like
nice.
an incredible scientist, and the son was an entrepreneur, and they ended up doing something in
Yeah.
the dad's field, similar dynamics to us. So no, I think it's a little bit different than like partners, husband wife or partner partners. So
Yeah.
a little bit different, but no, I mean I don't I can't recall any VC I talked to being like, I think we're gonna pass because you do this with your dad. I think everyone was like, your dad's pretty funny. I can see why people watch the YouTube videos. So that
Interesting.
worked out pretty well.
Interesting. And so, are you on the venture path? Do you want to raise more?
Oh, man, tricky situation. Do I want to raise more? No, I don't. Am I contemplating raising more? Yes. So, it's an interesting time. Like, we've built a business, it's growing, it's profitable,
Hmm.
and there's an insane amount of uncertainty in the market as a result of these tariffs. So that's why I contemplate raising money, and that's why we keep, I have conversations every week with prospective investors, and I am incredibly strategic in thinking about organic and inorganic growth for the business. So, do I want to raise money? No, no, of course not. It's dilutive. The business throws off cash nowadays. Like we can invest in things ourselves, and it's an incredibly uncertain time in the market. And in parallel with that, there's this huge technological opportunity in AI, and so it'd be foolish as a leader and as an operator to not think about how do I best approach, an uncertain time and a time where I want to have, cash on the balance sheet to be able to invest in artificial intelligence and what impact that'll have in the auto industry. So yeah, short answer is no, I don't want to raise any more money. Of course not. You get new board members, you have new governance, you have new share classes. But I mean, it's just a whole hodgepodge. And yeah, we might, because we got to take advantage of this opportunity and we've got to play offense, especially when Warren Buffett's got the quote, when the tide goes out, that's when you can see who's wearing their swim trunks. If there's opportunities, like I want to be able to grow, I want to go. And so having capital and having money to deploy is critically important.
Right. We spoke about monthly updates. You have a long list of people who are not your investors on that list. How has that helped you?
Sending monthly updates for me is a practice I started when we started the business as a way to demonstrate accountability to myself and accountability to my peers being investors, peers being, to your point, Vishesh, the staff, the people that I work with, and peers being those who I think may want to be involved in the future. And so what I've done with the monthly updates, and it's really fun, I actually will start publishing them on my personal website pretty soon. I have to redact them fairly heavily, but I plan on publishing them. And it's been really humbling because actually one of our funds has asked me to, and I did this years ago, create a template for my updates so that they could share it with other founders. It's just about providing access to the information. I forget who it was who told me this, but it was something to the effect of like adults at work are given a lot of responsibility and lots of expectations, but then they're not given the information they need to be autonomous. And so with these monthly updates, I mean, it has, here's how much cash is in the bank. Here's what our monthly burn or positive EBITDA was. Here's the org chart so everyone sees where they stand. Here's what we said we were going to do last month and did we accomplish it this month? I mean, it's all there. And for me, it's in service of my expectations of the team are to be autonomous, entrepreneurial, innovative. And if they don't have access to the same information that I have, how can they be? And I think that's also engendered trust at the board level, at the investor level, or at the advisor level, which is important as well, because those advisors may want to write checks in the future. They may want to get more involved. Some of our advisors have become full-time employees in the past as well. So opportunities to kind of use it as a sales tool to build momentum and excitement in the business.
Interesting. And so you started doing this before raising or after raising?
I started doing this before raising money. I was writing I actually used to write weekly updates. I was looking back in my Google Drive. I used to write a weekly update, share it with the team, share it with prospective investors. So that was one of the things that I did during the fundraising process when I finally got through via cold email. That was one of the assets I sent over, was my weekly updates, every single weekly update from the past, and obviously moving forward. When we were in the sales process of potentially fundraising, every week, that prospective investor was getting another update from me, even though they weren't involved yet. So again, it was a credentialing tool for me. It was a way to demonstrate the legitimacy of what we were trying to do. And then I transitioned to monthly updates because writing every single week, I mean, we get a lot done every single week, but it's kind of chaotic.
Makes sense. Yeah, it's a really good way to build relationships at scale, I guess, for sure. And so you are about to, I guess, launch a blog, or you said you're going to feed the monthly updates to another site. Are you about to launch a blog? Or?
So I have a personal website, my last name, Shefska, SHEFSKA.com, and I've written about building CarEdge on there. And it's a shame because I was so active when I first started the company, and then I really became inactive for years. And I've gotten more active again as I've started my coaching practice and wanted to kind of revitalize my writing. And I have all these monthly updates, and I'm thinking to myself, what am I doing? It's such a disservice to not publish those so that other entrepreneurs can see the journey that we've been on and analyze, what went well, what went poorly. And obviously we have the YouTube channel, the corporate YouTube channel, but I have a personal YouTube channel as well. So I'm really excited about taking what I've learned over the past few years, taking what I've documented over the past few years, publishing it, and then also creating YouTube content to help expose and here's what I learned, a little bit of peeling the curtain back from having scaled this business from 0 to 10 million. And hopefully that'll be of service to some entrepreneurs out there.
Awesome. Yeah, that's cool. I'll list out the channel as well. Yeah. And so we've spoken a lot about content, right? And I think a lot of people talk about keeping the content authentic. How do you ensure that you don't fall into, when you start, it's easy to be authentic, but as you gain momentum, you start comparing yourselves to others and you want to move faster and whatnot. How do you stay authentic?
Ooh, how do we stay authentic? We've experimented with a lot of things, and I wouldn't say that was being inauthentic. It was just experimentation. So I'm thinking about when my dad and I did car reviews for a month, and that did not take off. And more importantly, it wasn't fun for us. So I think actually the nugget in there is if it was fun for us. If it's fun for us, we do it. And that's authentic. If it's not fun for us, we might experiment with it, try it. If there's good positive business impact, maybe we'll find a way to invest in it. I will typically, if I'm not having fun, remove myself from it. So I think actually the thread in there of how do we stay authentic is doing stuff that's fun, doing stuff that doesn't feel like work. If it's feeling like work, it's a pretty good indicator to me that I don't want to be doing it. And that's not to, I mean, I guess in the video version of this, people have seen I've picked up my Iron Man water bottle quite a few times to get some water. So like, I'm happy being in pain. I'm kind of a masochist. Like, I like being in pain. So it's not that I don't like working and don't like being in pain, but I think to stay authentic, it has to be fun. It has to scratch an itch. And I think we've done a pretty good job of that. I think there are times over the past few years where we've definitely not had fun, and that's needed some recalibration, like either time away from the business, time away from making videos, or just like, yeah, general like resetting. But in general, I actually think, yeah, the nugget in there is if you're having fun, if I'm having fun, then I'm being authentic.
Makes sense. What advice would you give to someone who's starting a business with family?
With family specifically, be excited for the journey. Your relationship with whoever you are doing this with will evolve, and embrace that. Embrace, and lean into that. Lean into the relationship changing. My relationship with my dad is materially different than it was before we started the business, and in many ways, more professional actually, which is like, do you really want your conversations with a family member to be about your profit and loss statement? I don't know. I like it. It's brought us closer together. So I would say the advice there, which, take it with a huge grain of salt, but the advice there is like your relationship will change, and embrace that. Have fun with that.
Interesting. Cool. Well, that was it from me. How do people reach out to you?
So if you want to reach out to me personally, which I'd be thrilled to hear from someone, you can go to my website, just my last name, which again was Shefska, SHEFSKA.com. And from there, you'll have my email address. It's just my first name, Zach, ZACH, at Shefska.com. Everything CarEdge related, all you got to do is either Google my name or Google CarEdge, and it should pop up. And if you really want to get in touch with my dad, his name's Ray. So just Google his name and our last name, and he'll pop up. And if you're in the market to buy a car, check out CarEdge.com. Hopefully we can help you out. So yeah, lots of different avenues, lots of different ways to connect. But I'd be thrilled to hear from someone from your podcast, and really grateful for the opportunity to share a bit about my story and what we've done here.
Well, thanks for joining me here. It was a fun conversation, Zach, and it was great catching up again.
Yeah, really appreciate it. Thanks so much.
If you found this valuable, you can subscribe to the show on Apple Podcasts, Spotify, or whatever your favorite podcast app is. See you in the next episode.